Thank you for checking out crypto.chartguys.com, the source for technical analysis in the cryptocurrency world. We are proud to announce our own crypto alert system designed to give you the most critical technical trading information possible no matter where you are. Keep your eyes on the market with mobile or email alerts for MACD crosses, RSI levels, and even inside bar alerts for dozens of coins across multiple exchanges. New features and proprietary ChartGuys indicators are already in development. Our alert system is very easy to customize and utilize, so don't hesitate to sign up for the most effective crypto trading tool on the market at crypto.chartguys.com. Hello everyone, hope you're doing well. We're going to be doing just a quick update on the 3 here midday update, as I've got a dentist appointment later. But we're going to be looking at a lot of things because a lot has happened since the last video. In the last video I did, the bulls were still in full control. I talked about a couple stop losses we're going to look at. Before we get into it, for those of you that use the alert service, if you want to send a testimonial, if you enjoy the service, to alerts@thechartguys.com, we are going to compile some of that for the new website, and we will pick a handful of random people that do submit testimonials and give them a free month of the alert system. So if you are pleased with how it has been working, or if you have, we're always looking for constructive criticism as well, but feel free to send it to that email and we will select some winners, and we appreciate it. Also selected the course winners from the other day and appreciate all of that as well. Picked a couple random and then picked the person who wrote an entire screenplay for an opening scene at the Chart Guys on the farm. So looking at Bitcoin, where we stand, let's first review the red flags, because there were red flags when the top was in. The first was, of course, the inability to break the high of the bounce, 11,775. So we topped out at 11,645, $130 below that level. That is why we're seeing such a magnified pullback, the inability to break resistance, and people saying, up, there's a top there, I'm going to exit. And I see this in stocks all the time, and I use it as a top fishing play in stocks all the time, where if you cannot break the resistance, the high of the previous day in the first 15-20 minutes of trading, you go bearish because people lock in profit, noticing that we're not going to see continuation at higher highs. This is obviously just occurring on a longer term time frame. So the red flags in the video that I did yesterday, I was highlighting stop loss levels, and I was in a position at that point, and I highlighted my stop loss right here at 11,445, and then I also talked about potentially moving it up after the video to up here at 11,515, which was a higher low at that point, and trying for a bounce. So got stopped out very quickly. And it was very clear that a lot of stops were triggering with the amount of bear volume that we saw to the downside. So big pullback, all kinds of supports breaking, and hopefully if you were in a bull position that is anything but a daily or weekly longer term swing position, you would have been stopped out as well. It was also a clear signal to go bearish. If you are looking at a clear daily resistance and you see the hourly higher lows being lost and you go bearish, you use it as a top fishing play and you say, okay, I'm bearish. If the bulls break 11,775, I am exiting my position, and you're looking for that shift in momentum, which obviously got a ton of follow through once the bulls recognized we're not breaking the top of this bounce at this point. And then all the profit taking followed through. So where we stand right now, we're looking for oversold bounces. We'll go into details there in just a moment. One other thing that I want to point out that was the initial red flag, and I highlighted this last night in the chat room, just in the sense that the 15-minute time frame, we've been highlighting how the 15-minute time frame bouncing off of 30 RSI on this uptrend has been automatic. It bounces either just above, just at, or just below those levels. So look at our bottom down at 9,300, and since then, the 15-minute RSI hit 31, 2, 3, 4, 5, 6, dipped just below it there for 7, just above it for 8 and 9, 10, 11, just below it. And this was the red flag. So after 9 times of seeing the RSI very briefly touch 30 and then bounce, we saw the RSI on the initial pullback reach oversold conditions and hang out there and linger. That was the red flag, and that had me say things have now changed. We are now seeing the shift in momentum, and the 15-minute RSI was my first indication that this pullback is going to be more significant. And now since then, the hourly time frame, same thing. We look back at the hourly. Ever since this bounce from the low in the 5,000s, the hourly RSI has touched 30 very briefly and bounced. And here we are dumping well below it and seeing magnified losses. So when you are in an uptrend, those RSI levels do not get as overextended to the downside. When you are in a downtrend, they do. So it stood out on multiple time frames to me as red flags, the fact that these RSI levels were getting down to more extreme levels again. So where we stand right now, I'm constantly comparing this pullback to the pullback we saw, because we saw a pullback from 11,775, the top, all the way down to 9,300. That's where our must hold level for me is. We'll check that out on the daily time frame in just a moment. But 9,300, that pullback that we saw, again, the hourly RSI did not get extended like we are already seeing. So that's telling us it is a more swift pullback. It is a more aggressive dump. There is potentially more volume behind it. When I'm looking to compare volume on these moves, I'm using Bitfinex. There's too many discrepancies between TradingView and GDAX with their volume for me to use it consistently. And that has to do with either their API or their WebSocket or things that are above my head. But I know Bitfinex is my go-to when I'm looking for comparative volume from previous moves. So this right now is still on Coinbase. We'll look at Bitfinex volume in just a bit. But what I want to point out is just how similar this pullback looks. It looks like an all-out dump, a weak bounce, a lower low, lower high, lower lows the whole way down. And here we have very brief bounces, lower highs and lower lows. They end up being bear flags with continuation to the downside. So the magnitude of the pullback is happening quicker. Well, I actually shouldn't say that. It's the lack of bounces. The bounces previously saw stronger moves. So the first bounce from the dump from 11,775, the first real bounce went from 10,650 all the way up to 11,180. So that's a $500 bounce. The first bounce on this attempt here last night went from 11,170 up to 11,330, less than $200. So the RSI is staying at more extreme levels because these bounces are getting no follow through. Again, this was another huge bounce back on the previous dump from 10,250 all the way up to 10,839. So almost a $600 bounce. So $500 bounce, potential $600 bounce. And here, the last bounce that we just saw was about $200 again. So there's a lack of follow through on any bounces at this point, which is keeping the RSI extremely oversold as opposed to the previous. So again, I'm just noticing differences. What was the pullback like then? What is it like now? I look at the 4-hour time frame and can see we're down in the 30s now on the 4-hour RSI very quickly, from just under 70 to just in the 30s. And again, I'm watching to see, very inconsistent, or I should say very insignificant bounces on this attempt. What I am looking for now, going back to the daily, is a higher low to form. This is not game over for the bulls in any way, shape, or form. It is concerning with the speed of the pullback and the amount of that pullback. But again, this right now is still at this point the potential for a cup and handle pattern. If we continue to see this weekend or this weakness, I will not be looking for a cup and handle pattern. But right now the psychology is there. The left side of the cup, the consolidation, the right side is unable to break the left side, and then we look to form a handle. But pretty soon, if we make our way into the mid to low 10,000s, this pullback is going to be too significant to call it a handle. So I'm not putting too much weight into that pattern. I just recognize that the psychology is there. So I'm looking at a couple support levels. The first level is 10,214. That's our most recent little low, higher low of support. And I won't call it a higher low. It's a support level. It was a higher low on the 4-hour, but I'll describe why I don't call that the must-hold level. The must-hold level for me is 9,324. Anything above that, in my opinion, is a higher low on the daily time frame, and I'm now looking for a daily equilibrium. High, low, lower high, and we're looking for a higher low to form. So why I do not call this a higher low, look at the action leading up into that level. So the action leading up into the must-hold 9,300 was the bears. The bears had control for 5 days. They showed a lot of strength, and the bulls said at this point, okay, we're done. We're completely turning this momentum around in a 100-degree move, or a 180-degree move, all bears to all bulls. That's a significant shift. That's a key support level. Here, we were already in control by the bulls. This is more of a stutter step, a sideways consolidation level established, as opposed to a pullback and a V-shaped recovery off of a support level. So similar to when we see consolidation forming with an inside bar, it is a support level, but it's not a must-hold higher low. So I do distinguish between support levels and higher lows, and that's my perfect example as to what the difference between these two are. So, a couple green candlesticks, consolidation sandwiched in between a bull move, as opposed to a complete bear move with a 180 turnaround to a complete bull move. So the must-hold level for me on the daily is 9,372, and we have tons of space before we even consider that level. We're 15% above that level. So longer-term bulls, definitely not pleased that we didn't break resistance and a little concerned with the speed of the pullback, but overall, the bulls are still in this fight on this bounce attempt going all the way back into early February. So I'm watching for an oversold bounce right now. I did make an oversold bounce entry. I made 60% of my position right here. I added the other 40% on this pullback to a lower low. I kept 40% intentionally. Rather than putting a stop loss with the hourly RSI at 18, I wanted to be able to scale in further if we did see continuation. And again, that hourly RSI at 18 tells me to just be patient. So that's what I was doing. And I ended up taking a small amount of profit, just under 11,000. And really all that was doing is just lowering my cost basis before getting back to break even. So then once this little bounce attempt, which was really a weak bounce attempt, if you look at the 5-minute time frame, we never went from 5-minute higher lows and higher highs to try and establish a 15-minute higher low. So even though it looks like a 15-minute higher low, if you zoom into more details, you can see the 5-minute chart never had the bulls in control at all. So that 15-minute chart didn't really have much follow through. But either way, that was my signal to start taking a little bit more off of the table and exiting positions. And at that point, it was a small loss from my average down. At that point, my average was at about 10,900, took a small amount of profit. So my average was a little bit lower, but back to scaling back in at this point for me, because when the 15-minute RSI, and actually I just scaled in a little bit down in the 10,700s, but keeping a lot of cash on the sidelines so I have space to keep scaling in. So the 15-minute RSI just got oversold. It's no longer oversold due to the bounce that we just saw, but the hourly chart right back to oversold conditions. And again, looking for a higher low on the daily time frame, which tells me that I'm looking for a more significant hourly bounce to play out. And if I have to take a couple small losses while looking for that low, I know that once the bottom is found for this pullback this morning or today, that the gains will very quickly eliminate those small losses. So I'm containing my risk. I'm keeping cash on the side so that I can lower my cost basis. I'm taking small amounts of profit once I get small gains to continue to lower my cost basis to break even, and just patiently waiting. Of course, if you could be shorting, there's a lot more opportunity shorting in this environment, but I do not have that ability on GDAX at this time. So that's what we got here on Bitcoin. Let's look at Litecoin. So Litecoin on the daily time frame gave us a very clear equilibrium break. We've been watching this pattern for days and days now with our high of the bull move. Let's make sure we are magnety. We got our high of the bull move, low of the pullback, lower high, higher low, lower high, higher low. Clear bear break number 1 was a break of 205.20. Clear bear break number 2 was a break of 200. And if you went bearish breaking 205.20, we pulled all the way back down to the 194s. That's a really solid 5% pullback in a brief amount of time. Look at the volume. Remember, I highlighted declining volume, and we would see a spike in volume when the pattern breaks. Here's a clear bear break and a clear increase in volume with that break. And we are now looking at the bears in control, and the bears are going to remain in control on this daily time frame for Litecoin until we break the lower high pattern. So the most recent resistances are 231.50 and 217.50. 217.50 is now the most important level for me. On any bounce attempt, anything under 217.50 will be just a lower high on this daily time frame. Next support after the low of this pullback at this point is 182.55. And that is a key level that the bulls want to maintain. So a bear break on Litecoin. Let's look at the 4-hour time frame. Got oversold, and here we are right at oversold again. Huge initial dip. Bulls locking in their profit when they had it, and now here we are right back down again. So we bounced from the 194s up to the 203s. Again, really solid 3-4% bounces, but fighting the trend, we have to be quicker to lock in our profit because we are going counter the trend. We're swimming upstream. Here's the 4-hour RSI right back to oversold. We're on our eighth red candlestick in a row on the 4-hour time frame, and the hourly RSI did cool off from oversold conditions, gave us a new resistance level of 204.55. So for any bounce attempt on the hourly, anything under 204.55 is bearish, or I should say is a lower high. And here's a clear inside bar bear break telling us the bulls have lost their momentum on this bounce. As soon as 201.48 broke, we saw continuation to the downside. So once the hourly and 4-hour RSIs get oversold, definitely worth keeping an eye on, short-term bounce entries. And if you are playing bearish on these oversold bounces when the RSI cools off, you can be looking for bearish entries. Another point to make is that the most extreme dumps are going to see the fastest, quickest bounces. And that's the case for Litecoin. The fact that the 4-hour RSI is oversold, while the Bitcoin 4-hour RSI is not oversold, definitely leads to more significant our oversold RSI levels, and then quicker bounces once the bulls do show up. So as of right now, as we are recording this, the bears are still in full control. We are looking for a low of the day to be set sooner rather than later. And the fact that we just dumped down to lower lows on Bitcoin, we're not seeing those lower lows on Litecoin just yet. The bulls are trying to form a higher low. So that's also a distinction worth noting. And checking Ethereum. Ethereum on the daily time frame, clear bear break from this little no trade zone we kept highlighting the last 6 days. And now the next support levels are 808.37. And then 786 is a very important support level that the bulls need to maintain. Break 786, and that's the same thing as Bitcoin breaking 9,300. We lose any progress on this bounce, and the bears go right back to full control. So the 4-hour time frame highlighted in yesterday's video kept the trend in favor of the bears. The bears have been loving Ethereum because it's following the patterns very easily. Lower highs and lower lows. We had a bounce attempt that was unable to break the lower high pattern, just missed, and here we are right back down to lower lows. 4-hour RSI is oversold on Ethereum just like it is on Litecoin. The hourly RSI did dump down to a lower low, so only Litecoin out of the big three has not hit a lower low just yet, and we're watching now a new resistance on Ethereum. 831.51 is our new hourly lower high. So again, very clearly, the bears are in control, but we have to keep in mind the daily chart is not game over for these bulls in any way, shape, or form at this point. The fact that Litecoin and Ethereum have made more bearish daily breaks than Bitcoin has is definitely worth noting. And all of that information combined with the fact that we're seeing some decent volume and a pretty swift pullback, it does have the bulls nervous. There is no doubt about that. So looking at Bitcoin on Bitfinex to compare volume, look at the volume on the daily chart. Not significant, really. We still obviously have a long way to go, maybe 6 more hours. But look at the first pullback day from the previous pullback. Again, the 11,700s pulling back to the 9,300 area. So the first day of that pullback, the bear volume, we had 77,000. Here we are with about 6 hours left in the day, and we're at 31,000, less than half of that. So on the shorter term time frames, it looks like a lot of volume, but comparative to the last pullback, we're not seeing a ton of volume. So looking at the hourly chart, and again, going back to what it looked like back then, look at the bear volume on that initial dump from the high of the bounce at this point. Very significant. This volume looks significant compared to the bull volume we've been used to, but overall, it's not a ton of bear volume comparatively. So that's another point. So I'm right now picking out little clues and details on all these indicators, and I'm adding them up in my head, so to speak, and saying, okay, does this shift us to more bearish and to more bullish? And right now, the signs that I'm seeing are pretty much a wash in terms of, you know, the fast drop, the RSI levels getting to more extreme areas, the fact that we set a lower high on the daily, but also the fact that, you know, volume isn't too scary at this point, what the bears are showing us, and the fact that the daily chart is anticipated to form a higher low and give us an equilibrium pattern at least, and things like that. So we're going to get a lot more information every day that goes by, and watching to see a shift in the hourly trend to a higher low and a higher high will get the bulls a new support level to be watching. And once the 4-hour time frame gives us a shift to higher lows and higher highs, that will be our new daily higher low, and we'll then be looking for that equilibrium pattern to play out. So where I stand right now, currently still in about a half Bitcoin position at this point. Again, still keeping cash on the side. I did eat a small loss on the initial bounce attempt, and confident that once the real bounce and the real low of the day gets set, that will quickly erase that small loss. So that's where we stand. And another point that I want to make, just touching on an article that I just read, and it's an article I agree with, and fortunately it's still up, so here we go. The general public won't care about crypto again until Bitcoin breaks past 20,000. This is sentiment that I can really agree with. And if you remember when the Robinhood news came out, I wasn't very bullish about it. I said, yeah, it's a great thing, but you know, the serious traders, the people that are going to use the Robinhood app and trade from their phone, they're not trading with significant capital. We're not going to see a huge influx of money from people, you know, buying $2,000 worth of Bitcoin. So that was the fact that, and you also remember, if you've been watching these videos for months, I was talking in my previous videos, who's going to be buying in Q1 2018. The whole world has heard about Bitcoin by the end of 2017. It's on CNBC daily. We're seeing it in the articles. All the FOMO's kicked in. You know, who's waiting until early 2018 to buy? Everybody that wants to buy at that point is going to have already bought. And in my opinion, that's why we saw the shift from the longer term, you know, euphoria to the significant pullback, because there were no buyers left in Q1 2018. Everybody that wanted in had gotten in, and everybody that doesn't want in is not going to get in. Now it's going to take new all-time highs and a move over 20,000, in my opinion, to attract the general public again. The general public doesn't care about Bitcoin anymore unless there's, dollar signs in their eyes for the gains that they could be making. So we need new all-time highs to regain attention again. And until that happens, which could be months and months, maybe even a year or two, that's not going to regain the general public's attention. So that is definitely something that I feel is going to be holding us back in terms of seeing crazy action for the bulls that we saw last year. Also, to the same effect, I believe that the momentum will significantly shift once we reach a point where it says who's left to sell. Everybody that was going to sell Bitcoin on a pullback has sold Bitcoin at this point. I don't believe we're just there yet. Haven't seen enough action that's making me confident of that. But we will reach a point in 2018, probably in the first half of 2018, where we say, okay, who's going to be left wanting to sell Bitcoin and going to get scared out of their position that hasn't already seen that happen after a 75% pullback. So we are potentially nearing that point, but in my opinion, this daily chart is going to give us a ton of information once this daily chart breaks on Bitcoin. Again, anticipating the equilibrium pattern, and if that does play out, we'll look for the equilibrium pattern to break sometime, perhaps towards the end of the month. But that's going to dictate where we go pretty much in terms of direction for April, in my opinion. So this tightening daily pattern is going to be very key, and obviously watching the weekly pattern for any longer term signals. If we do break bearish from the daily pattern, this weekly chart could absolutely be a bear flag after a really weak bounce attempt comparative to the dump that we saw. So definitely keeping a longer term perspective on things, keeping, some psychology of the market in general in mind as to where the new money is going to come from to buy things up. And at this point, just watching that daily chart tighten up. I appreciate you watching. Feel free, again, send those testimonials into the alert system email. We would certainly appreciate that, and we will pick a few people to give away some free months. Have a great night. We will see you tomorrow. Or I guess it's still daytime. Guess it all depends where you are. Have a great something. Do good things. Almost forgot. See you tomorrow.